Today we got our first round of economic data specifically regarding payrolls for 2023, and this is actually payroll data for December of 2022, and it was much higher than expectations. This is causing the stock market to drop across the board about 1% today. So we're going to get into exactly what these numbers are. We're going to talk about the payroll data as well coming tomorrow. That's going to be a little bit more important than today's data, which just means we could see a very big move in the stock market coming tomorrow, especially because tomorrow is a Friday and the first Friday of 2023, guys. So we're going to get into all of this data. We're going to talk these numbers, all the boring stuff. We're also going to talk everything you need to know about AMC stock as of right now, guys. The cost of borrow rates, the short interest, and much more. So let's get straight into this video. Hit that like button and subscribe to the channel if you like these kind of videos or if you just like to make some money. Now, private payroll growth surged by 235,000 in December, well above estimate, ADP reports. Private payrolls in December rose 235,000 for the month, well ahead of the 153,000 Dow Jones estimate, according to ADP. So this was almost 100,000 more jobs than what we were expecting. So this is a big reason why the markets are down about 1% across the board today. And this ADP report is not as important as the report that we are going to get tomorrow. So what we're going to get tomorrow, and keep in mind this is the first Friday of 2023, and Fridays tend to be pretty volatile. Some people don't like to hold positions over the weekend, and they tend to, loosen up on positions heading into a weekend. Non-farm payrolls come out at 8:30 in the morning tomorrow. And you got the unemployment rate for December as well. Non-farm payrolls for December. Also, we are expecting 220,000 job ads for the month of December. If this comes in higher than 220,000, even marginally, probably going to be a pretty red day in the markets. Now, if it comes in as a beat that's similar to the ADP report, that's like a 40% beat, yeah, not going to be good for the markets. If this number comes in at 300,000, it's going to be pretty bad. I would expect a 3% down day for the markets. Now, if this comes in less than 220,000, it's going to be a very positive thing. For the month of November, you were expecting 200,000 job ads, and it came in at 263,000 job ads. So last time around, you did beat by a pretty big amount, and you did get a negative reaction in the markets. Now, you are also getting the unemployment rate, which is expected to come out at 3.7%. If this goes down for whatever reason, it's going to be a negative thing. If this goes up more than 3.7%, it's going to be a positive thing, because the markets are really targeting that 4 to 4.5% unemployment rate to kind of get the Fed to back off and stop raising rates so aggressively. So the quicker we get there, potentially less pain we are going to see for equity markets. And that's really it for the big economic data. You are going to get at 10 o'clock in the morning as well, ISM non-manufacturing PMI for December as well. I don't think this will be nearly as important as the unemployment rate or the non-farm payrolls. Actually, I know for a fact it won't be nearly as important. You also do get Fed speakers tomorrow. Fed Cook that speaks at 11:15 a.m. as well as Fed Bostic and Fed Barkin that all speak around that time as well. And you also have Fed Bostic that speaks again. He speaks twice tomorrow around 3:30 p.m. Tomorrow. So these Fed speakers, their commentary is going to be important, like we seen with Jim Bullard today. He did speak, and this is what caused this really the only aggressive move to the upside that we've seen throughout the whole day today right here, because he said we were getting close to restrictive, and that, close to the Fed stopping raising rates. And that quickly got kind of turned and rebutted a little bit, and obviously towards the end of the day we are getting this sell-off. So even words like that are not sticking with the markets. They're not really believing the Fed as of right now. We need to see the economic data actually play along. Tomorrow is going to be a big answer to that. Is the economic data going to play along, or is it going to start playing along and get us closer to this environment where the Fed can stop raising rates? Big questions will be answered tomorrow, and that's why a big move in the markets will be coming tomorrow. All right, guys, now let's talk AMC, and AMC is down about 3.5% here today, but the charts actually look encouraging because you are off of your 52-week low now for the last 5 trading days. So what that means, in my opinion, is you are getting closer to marking a bottom, to really finding a level where AMC can stay at and make its way higher. Throughout everything that we have seen, bad news with Tesla, bad news with Apple, the market's down a bunch, AMC still holding up very resiliently and forming this bottoming formation. And that is a very encouraging thing if you have been in AMC for a while, or even better yet, if you are looking to make a position. The longer we stay in this bottoming formation and don't drop, the less risky it's going to be to start a position or to make a bullish trade. So we'll come back to the technicals here in just a second. Let's get into some of the data over on Ortex. So let's go ahead and pull up the live short interest. That is sitting at 21.5%, up 0.5% here today. About 111 million shares sold short currently. 622,000 shares sold short here today. If we take a look at interactive broker short availability, there's about 200,000 shares available to be traded, to be lent out, to be sold short, with a cost to borrow rate of 101.23%. If we take a look at the cost to borrow average, sitting at 248%, cost to borrow max at 268%, and cost to borrow minimum at 64.5%. So the numbers definitely looking very encouraging, because not only if you wanted to take out a short position are you going to pay a lot for it, but a lot of the short positions that have already been taken out with cost of borrow rates that are a lot lower than 100 or 200%, well, they are seeing those rates jumping on them because they are adjustable rates 9 times out of 10, unless you make a private deal with someone, right? Your rates are going to fluctuate with the volatility and with the risk of shorting that asset. You know, when it goes up or down, just common sense here, your risk profile is going to change. Your cost of borrow rates are going to change as well. So there is that. As far as the option activity, 8 orders totaling $2.5 million, positive order value of 2%. Now, something different that we are seeing here this week is a lot smaller option activity, or a lot lower option activity from institutional investors on AMC stock. $2.5 million is not a lot, especially compared to last week. And even last week, you've seen about $60 million of option activity on AMC stocks. So the numbers are looking a lot smaller here. And just like I said, on a technical basis, when you actually pull up the charts, you're above the 52-week low for the last 5 trading days now. That makes me a lot more bullish. That makes me say, hey, we're in a bottoming formation, right? You're even getting some bullish indicators like the RSI that quickly dropped under 30, and just as quickly as it dropped, came back up and gave us this RSI momentum technical indicator. If we do go ahead and pull up the MACD as well, you guys can see things are almost as bad as they can get on a technical basis, especially back here when we were actually hitting that 52-week low, and now you've started to really bottom out. So even after today, where the ADP report was really, really bad, AMC performing better than a lot of other stocks makes me very encouraged on potentially what is to come with AMC. Now, the levels to the upside that you want to watch for is going to be about this $5 level. That's still the level in which we'll find resistance at as we make our way to the upside, which I do think will happen. Because after all, AMC does not have to go along with the broad markets. I think we will make that test to $5 per share. Once you get to $5 per share, the question is, do we hold $5? Do we get rejected around $5? Or do we even go as high as $6 and touch this 50-day moving average? Because I think it's pretty clear to say, fundamentally speaking, if you're a short seller, you have squeezed out all that you are going to squeeze out of AMC. The reason it's finding a bottom here, the reason why, you know, the stock is not continuing to go down and down and down, is due to the fundamental argument of the movie theater business is not going away. AMC at a very respectable valuation. Now, it's hard to say the stock is overvalued at these levels, and the business is going to be here. Like I said, that's a big key. And you're also in this reopening phase, especially as China continues to open up, especially as the world continues to open up. There's going to be a lot of demand for movie theaters, and there's going to be a lot more movies heading to those movie theaters. So I think for all intents and purposes here, you're pretty much at that lowest point that you are going to hit. Obviously, we could go lower during short-term panic, but I do think right now offers a seriously fantastic risk to reward profile. I think there's a lot greater potential reward that the stock is going to go higher from here than to drop from here, guys. So that is going to be it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.